Hello, Oracles. Well, today we are going to be discussing gaps. Gaps in Tesla stock, gaps in all stocks, and how you guys can recognize them, and a little explanation behind what they do, why they are created, what we can see as far as reading the charts go, and what it could potentially tell us for the future. So we will get into that in just a minute. All right, so first things first, what is a gap? A gap is an area discontinuity in a securities chart where its price either rises or falls from the previous day's close with no trading occurring in between. Gaps are common when news causes market fundamentals to change during hours when markets are typically closed, for instance, an earnings call after hours. So let's say Tesla stock closes at $100 one day, and then we have something come out, some news comes out, and then the stock opens up the next day at $110. Now there is a gap between 100 and 110. That gap wants to be filled. And so the next question to ask is, how often do stock gaps get filled? Sometimes they can take years to fill. We saw that last year when it came to Tesla stock. However, it's worth noting that roughly 9 out of 10 gaps get filled eventually. Rather than thinking of this trading method as a hard and fast rule, you should think of gaps in the chart like magnets. They can be resisted, but they can provide an added pull to the stock's price action. And so, again, it's not a guarantee that every single gap will get filled. There are four different types of gaps. We will get into that at a later video just to discuss the different types of gaps that are out there. It's a little more in depth. This is more of a basic video on just general gaps. So, with that said, looking at the fact that we have a lot of gaps in Tesla stock, we will dive into those in a minute. We can anticipate potentially these gaps getting filled. Now, a lot of times we think, the stock ran up as much as it did. We got the Hertz news. We got great Q3 earnings in 2021, and we had monster gaps that were opened up behind us. We thought we would never come back to those levels. Sure enough, we did. Over the last year, we filled nearly all of those gaps. Every gap that was created down to $100, we filled. There are still some below $100. We will discuss those in a minute. But it's one of those things where, again, with that magnet pull, not to say that we are going to fill those gaps, but they are there and we have seen them get filled in the past. This is just one of those reasons why I keep it on my radar as something of these gaps are out there, they do exist. We could potentially pull in that direction. And so I use Webull. There's a couple of different ways I looked up gaps. I used to just go to Yahoo Finance and look at the stocks, and I would go through the entire chart and say, all right, where did it close? Where did it open? Did we end up filling that gap? There's a lot more work on Webull here, and I'm sure that there's other trading platforms that you can do this on. So looking at the gaps that we have here, we have going down to 146.41, and this tells you the entire span of the gap. So 146.41 to 154.76. We also have the gap that goes down to 133.51, 122.63, 114.39. We have a gap above us that goes to 262.47. And then we do have gaps further below. And these were ones that we were discussing when we pulled down to that 101 level. So if we go back, and again, these are old gaps. I mean, as they said, it could go back years. And we have this now going back to 2020. And we've got gaps that are filling here. I mean, look at how far I keep going here. So we've got a gap here that goes down to 94.67. We've got one that goes down to 81.87, 75.69. We've got 59.10 and 55.67. And so these are all denoted right here. They say it, and you can see this little gray bar that goes across that shows and indicates that gap has been created. And again, going up, there's only that one gap that I had seen. If you guys have seen any other gaps, my charts do not show it. I dug in. It looks like every other gap above us actually did get filled. So the only gap that we have above us that has not been filled is that 262.47 gap right here. And so when you dive further into the different types of gaps, whether it's going to be a common gap, a breakout gap, an exhaustion gap, that's going to determine, the chances of it getting filled. So overall, gaps fill 9 out of 10 times, but there are some gaps that may not fill. A breakaway gap may not fill. It fills less frequently than the other gaps. A lot of times when we do see a gap opening, we may see a $2 or $3 gap one way or the other within the first, hour or so of the trading day. It is common for that gap to get filled. So a lot of times gaps open and get filled the next day. Sometimes it may just take a couple of days. But as we have seen when it comes to Tesla and other stocks, in difficult times like we're going through with the economy right now, we can see a lot of volatility, a lot of gaps getting opened up. And now that we saw that massive rush from all of the COVID action going on, all those gaps that we saw on the way up, now that the stock market is cooling off and the stock is pulling back, we are seeing these gaps getting filled. So again, a lot of times, human nature tells us that how could we possibly pull back down to these levels when we are running the way we are? This is where market manipulators and market makers come in. Market makers want to fill that gap. It is something that is just open. You're like, all right, well, there's no trading action within this price block here. We want to make sure that there is some trading action in that price block. And so they will intentionally pull the price down to fill that gap. And we have to remember that algorithms are trading so much faster than humans could possibly even think about trading, and they are running based upon this information. So those algorithms and computers want to bring the stock price down to fill that gap at some point. It's just waiting for that timing to get to the place where it can make that happen. So what those reasons are way out of my control, way out of the control of any one of us. It's one of those things that we just kind of have to monitor and kind of go with and say, hey, this is a potential. There's a chance this could end up getting filled. So we just wait, and now here we are. And anybody who doubts the fact that these gaps could get filled need to really take a look at what happened last year. We never thought, I was one of them. I was guilty of saying, hey, the stock under $1,000 is a great buy. I didn't think we would ever come back under $1,000. And then here we are, we're significantly below what that was even post split. So, anything is possible. And we have to always keep that in mind that anything is possible. So we don't want to base all of our trades off of it and say that it's guaranteed that these gaps will fill, but we've seen that they do fill 9 out of 10 times, and we do have these lower gaps below us now. So even if we don't break below that $100 level to fill those gaps at 94, 87, all the way down to 55, we do have these gaps that take us down to 114 that were created relatively recently. Those could potentially get filled despite the fact that we hit almost $200 this past week. So again, this is just the education on gaps, something to keep on your radar as an investor. When it comes to Tesla specifically, I of course think that we are going to do extremely well in the long term. But in the near term, volatility could cause us to come back down and fill these gaps. To me, that's going to be a great buying opportunity. And that's one of the things that I pay attention to these gaps for is, I have been buying all along the way, but with that potential of us coming down to fill those gaps below us, I want to save up that cash to take advantage of that opportunity if it arises. So hopefully this helped you guys out, gave you a little indication of what gaps are, where you can see them, how you can recognize them. Again, there's a lot of different ways. I'm sure most of the trading platforms that are out there have some way of showing you the gaps. So if you guys don't have one that does that, again, Webull is great for it. It shows it in a manner that is easy to read. So I highly recommend that if you guys don't have a trading platform that shows it and you guys are curious about them. Now, again, when it comes to charts and gaps, that's a lot more near term. Now, granted, while yes, it could take a couple of years for these gaps to get filled, when you're looking at a company as a long term investment on a 10-year cycle, these gaps and these charts don't really matter that much because eventually that stock will continue going up and get back to those fundamental basics and track the fundamentals along the way. So again, this is more for a chart and technical analysis and trading type of mentality versus an investor type of mentality. But those of you who have asked, these are your answers here, and I will get into a little deeper one explaining the other kinds of gaps as well in the future. Thank you all so much for watching. I appreciate all of your support. Please hit that like and subscribe button, and we will see you in the next one.